Little bit about taxes, just the pitfalls out there that people fall into this time of the year. Specifically, I wanted to start out with you today, Mr. Botkin, talking about the pitfalls of doing them yourself. More and more computer programs out there allowing you to do so. What are the fallbacks? What are the problem areas?
Well, I'll mention something that TurboTax and Microsoft Money and H&R Block will tell you, and that is IRS actually did a study. And you can find this on the web. This is nothing unusual. And what they found is that people who do their own tax return have over twice the error rate of those prepared by a professional accountant. And even worse, not only are they omitting lots of deductions, but if IRS knows you have twice the error rate, what do you think that's going to happen? It's going to cause an audit. It'll increase your chance of an audit. And even worse, who represents you? The box? People who do their own tax return, who have any kind of complexity of business, own real estate, should not be doing their own tax return. They are being penny wise and dollar foolish. I, as a tax lawyer, don't even do my own tax return. What does that tell you?
Yeah. Okay, let's get into the crux of the conversation. Whereas we talk about these programs, you mentioned a few of them that are very popular out there. But when you talk about these programs, they say they take you step by step through the process. If you're doing them yourself, they look for those problem areas. They tell you if you have errors, and then they offer you audit protection at the end. You're saying this is fool's gold?
The audit protection is very, very limited, number one. And secondly, there's an old saying among computer people, garbage in equals garbage out. If you don't know what exactly you're doing, chances are you'll make a mistake. You wouldn't have twice the error rate if they were that easy.
Let's talk about audits, the dirty word that comes up this time of the year, and some of the interviews I've heard you doing. I heard one recently on 700 WLW did with Bill Cunningham, and you were saying how fewer and fewer of those tax returns out there are being audited. Why is that?
That is correct. The government did something that was incredibly stupid. No industry would ever do this. They cut their revenue arm in eras of tight money. Who does that? They actually froze the IRS budget, which is incredibly stupid. So what's happening is people are retiring, people are leaving, and IRS isn't replacing them. Now, what IRS is trying to do is to make up for that by taking people from one area of the IRS and increasing the audits in the other area. But the problem is that, number one, they haven't done it enough, so that'll be a reduction in audits. And number two, where they're taking it out of is taxpayer service. So if you have a question and you want to call IRS, good luck trying to reach somebody. You're going to find it very difficult to do so. And to even do so is probably going to be an hour to an hour and a half wait.
Sandy Botkin, a best-selling author. He is also a CPA, tax attorney. Got some books out that people want to look for. Lower Your Taxes Big Time. Also, Achieve Financial Freedom Big Time. Putting big time on both of those. Talk a little bit about some of the things that people will find when they go and find your books.
Well, Lower Your Taxes Big Time is designed for anyone who has a business or even thinking of having a business. It deals with all kinds of things: how to write off your fun, your movies, your plays, your vacations, how to write off the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. What pension to set up, what type of entity should you be, where should you incorporate or be an LLC, and a whole bunch of other stuff. Achieve Financial Freedom Big Time is very different. It really came as a result of my book salesman. Every lawyer has a book salesman who said he can't find financial books that are independent. Everyone who writes a financial book either tries to sell him something, it's a big commercial, tries to get him in their firm. There's no independent financial books out there. When I looked, I found he was right. So I wanted to write something that's independent. I don't take clients. That's sort of like what your CPA should be telling you about your finances. And that involves all kinds of things in Achieve Financial Freedom Big Time, such as evaluating nursing homes for parents, some of the latest scams, shams, and slams that are going on in this country and how to avoid them. What type of mortgage to have, what to look for in insurance, whether it be car insurance or life insurance or whatever, what kind of a reserve you should have, how much you should have, how to get in-state tuition, by the way, for an out-of-state kid, and a lot more. I mean, Achieve Financial Freedom Big Time is a major work. It'll save people a lot of money.
Yeah, when you talk about Lower Your Taxes Big Time, a couple of the intriguing chapters: how to deduct your fun, which stood out to me, which I love, how to turn your vacation into a tax write-off, and then what you just said, you touched on right there, Sandy, just a second ago, making college less expensive. with tax planning. All interesting topics, and you're saying you'd have to be crazy not to get this information into your head. Talk to me, let's go back to audits for just a second. With the experience you have, how is somebody going to know that they're red flagged?
Well, first of all, there is no such thing specifically as a red flag. There's no published red flags. We accountants are very lucky. If we don't have an answer to something, all we have to simply say is red flag, and everybody thinks we're so smart. It's just a terrific deal for us. So there are no specific red flags. Let's make that very clear. There are some things, however, that will increase your chance of an audit. One of the things is failing to report your income. It's amazing. IRS now gets all these 1099s. On what you earned, and if they don't match what shows on the tax return, you're going to increase your chance of an audit. One of the leading indicators of an audit, which is really strange, is failing to sign tax returns. There's a lot of people who don't do that. But here's something that I'll bet your readers never heard. It's a really important issue. There's a lot of big ticket items that people can deduct. Medical, for example, dental. If you have your house destroyed, you can take a casualty loss that it isn't covered by insurance. The problem is if you take a big ticket item and you take that deduction, even though it's legal, you're probably going to be audited by the IRS. So what do? What you do is you file a statement with your tax return outlining the big ticket item, breaking it down into small segments. So for example, let's say you have $25,000 of dental. That sounds pretty high, doesn't it? But if I were to break it down and show that it involved orthodontia for my 3 kids and periodontal surgery for me and my wife, it doesn't sound that high anymore. So by attaching a schedule, breaking down the big ticket item, showing what made up of it and what's involved, you can actually reduce your chance of audit, even though you're incurring a big ticket item.
If you're in a certain industry, Sandy, talk to me about job-based write-offs. And if you go in, if you're in this field, you should be writing this off. If you're in that field, you can't forget this. Is it that easy? Are there those things that you can direct people toward?
No, generally it's whether you're in business or whether you're an employee. If you're in business, you get a lot of deductions. But people don't realize that we have 2 tax systems in this country. And I want to emphasize that. And when I first say that, most people think, oh, sure, one for rich and one for poor. That's not quite true. There's one for those who are employees because you are taxed on $1. And you don't get that many deductions, despite what most people think. And if you do take an employee business expense, it's got to exceed a threshold. But if you have a business, whether it's full-time or part-time, now you're in the system that makes you rich because you can deduct a lot of expenses. You get all your business deductions before the government gets 1 dime to drink. You don't have to exceed any threshold to deduct those expenses. And if that business generates a loss, that loss can be used against any form of income you have: interest, dividends, wages, rents, pensions, anything. In fact, if the loss exceeds your income, you can even carry it back 2 years and get a refund from the federal and state government for the last 2 years, or carry it forward 20 years. So being in business is the last great bastion of tax reduction, and it has tremendous benefits over being an employee. And it doesn't have to be full-time. It could be part-time just as well.
Sandy, you have brought up in interviews, once again, Sandy Botkin joining us, best-selling author. His book's entitled Lower Your Taxes Big Time, Achieve Financial Freedom Big Time. You may have seen him on Fox News Channel. Sandy, talk to us about home offices. I know in interviews I've heard you give a little bit of breakdown as far as what people miss when they talk about having a home office.
Well, first of all, I want to emphasize one various thing. When I talk about a home office deduction, probably 98% of the people feel, they were told it's not worth it or it'll trigger an audit. I'm here to tell you that if you're eligible and don't take it, you're crazy. In 1999, Congress liberalized the home office rules. Now, here's my question to everybody. Why would they do that if they didn't want you to take the deduction? My point is, if you're eligible, you should be taking it. It is worth tens of thousands of dollars. It's a big, big deduction. And to meet the home office rules, you just got to meet 3 tests. 1, you got to use an exclusive portion of a room for business. Doesn't have to be a whole room, just an exclusive portion of a room for business. 2, it's got to be used regularly. And that means at least 45 minutes a day, 4 to 5 days a week. And 3, it's got to be your principal place of business, which means that you do the paperwork for your business, you do the paperwork, the management for your business, and you don't have another office where you do any significant administrative work. If you are an employee, you can still claim a home office, but you got one more rule, and that is the employer has to give you a letter saying they're requiring you to work at home for their convenience.
Sandy, you said personally you were giving a bit of an anecdote talking about how you as a writer had one home office. Your wife, she worked in another part of the house, so you actually had two to write off, correct?
That's exactly right. You don't have to use one room. I have one room for my writing business, and for my other business, I have an application called TaxBot, which is kind of an expense tracker. And I have another room my wife used to use as a interior designer. She had designing tables and drafting tables and things like that. We were able to claim a home office deduction for each room because they were separate identifiable areas. Oh, and by the way, one more thing I want to mention. There was actually a study done by a friend of mine, a long-term study. And he found that people who claim a home office deduction versus those that don't claim a home office are not being audited in any significant greater manner. So by claiming a home office, if you're eligible, again, if you're eligible, you're talking about tens of thousands of dollars, and it will not increase your chance of an audit.
We are cramming a lot into this interview. We so appreciate Sandy Botkin spending some time with us. Sandy, there are dirty tax scams out there. In our remaining minutes, I want to be sure to make sure that people know what we're talking about here. I want you to run over a few of them for us: tax fraud and some of those phishing scams which are out there right now.
Well, the biggest one by far is identity theft. I can't tell you how important that is, where people get your information and then they file forged tax returns, usually claim for refunds, to get back money. So when you file your tax return, now there's no money for a refund. And that's happening a lot. IRS set up a whole division on this. I mean, it's a very serious problem. The second problem is phishing. Now, phishing, it sounds like something you do with a lake. In a sense, it is, because they're essentially luring you to give out personal information. And they might send you an email, or somebody might call you saying you're entitled to a refund or you owe money. And then in order to take care of this problem, they want some personal information to make sure you are who you are so you can get that refund. Sometimes they'll send you an email to go to a website that looks very authentic. You couldn't tell the difference. And they ask for personal information to make sure that you are you. First of all, you should never, ever, ever give out personal information on a website that you don't 100% trust, that you are solicited for, or to a person who calls you on the phone. I don't care who they are. IRS will never ask that information, and you won't have to give it. Do not give out personal information. Now, there's one scam that I want to make attention of, because it's a relatively recent scam, and it's a big one. This is where the scammers already have your ID number, your credit card number. They already have your address. And a lot of ways they get that is they go through mailboxes looking for outgoing mail, and they take the outgoing mail and they look for that information. So then they call you up and they say, hey, there's a $497 computer telemarketing device. Did you order that? And of course you say no. And you say, well, we've been watching this company. If it's under 500, they tend to charge it so people won't notice it. Well, we're going to give you a credit. And we're also going to give you a number. They give you a number. And if you have a problem, please call the fraud division of your credit card number. Mm-hmm. And just so you know that we are the fraud department, your credit, let me make sure this is your credit card number. And they actually read it to you. And this is your address, right? Because they got that from your mail.
Right.
Sure. Now, here's where the scam comes. We want to make sure you didn't lose your card. So turn your card over and give us the security number on the back, the 3-digit security number. Or the American Express, give us the 4-digit number on the front.
That's an absolute
no-no. Once they
no-no.
get that number, that's how they got you.
Yeah, definitely. Finally, in our last seconds, Sandy, I wanted to press you on this. Getting a refund, a good thing or a bad thing?
You know what? I don't like refunds. I know some people do it because the problem is it's interest-free money with the government. I had somebody who told me he got audited by his accountant. And that he loves this accountant because the accountant always gets him several $1,000s in refunds. And my answer to him was, you should be audited every single year. If I have an accountant that all I do is get refunds when I get audited, I would fire that accountant. I want an accountant who's honest and who's aggressive. And if I don't have that, I find a new accountant.
Sandy Botkin, he is a CPA tax attorney. He is a best-selling author. You may have seen him on Fox News Channel. Lower Your Taxes Big Time is one of the books out there, which is a must-see, if you can phrase it in that way. Achieve Financial Freedom, the other one. Achieve Financial Freedom, I can't forget, the Big Time. You can also go to taxbot.com and is there any place else we can, taxreductioninstitute.com, another place we can go see you, right?
That's correct. I have taxreductioninstitute.com, where I have all kinds of educational materials. And I also you can get my books at books, BOOKS, www.sandybotkin.com, or you can go on the various Amazon or Barnes & Noble and places like that.
Glad to have you here in Northwest Ohio and Southeastern Michigan for our audience. Thank you so much, and enjoy the rest of your tax season.
It's my pleasure. Let's make everybody's life less taxing.
I love that line. Thank you so much, Sandy. We'll check in with you later. Stay right there. We've got more of the Roundtable coming up. We will talk with a local money man, talk about some of those changes in how you save your money, how it's changed over the years, why it's not so good right now. Stay with us.